Hello everybody, and once again welcome to Sinhanomics, the money machine. It's pretty much the time to say goodbye to 2023, the fantastic calendar year. Yes, you heard that right. What a fantastic year it was for the equity investors. Across the board, throughout the world, the market has done extremely well. And the interesting part is that these all happen in the increasing interest rate. Yes, guys, this kind of has defied the economic principles. When the interest rates go up, the equities market decline. But this year, it has been the other way around. And what does this mean? The new year that we are getting into, 2024, looks like it's going to be another spectacular year because the interest rate has peaked and now the next move is down. When the interest rate will go down, the market should definitely rally. Having said that, guys, nobody can predict the stock market. There's another saying, buy the rumor and sell the news. So probably they have actually bought the rumor that the interest rate has peaked and that's going to go down. But when the actual interest rate will go down, probably the market will underperform. You never know. And that's the beauty of this stock market investing is all about. You are never short of excitements and adventures. Well, as we are getting into the new financial year or the new calendar year, to be frank with you, 2024, I am here to talk about some of the New Year resolutions. Yes, guys, the New Year resolution for investors. And many of those who are new to this world, you will find it more useful. And I'm telling you from the experience of my own investment career for the last 20 years. And I had some good learning lessons as well. I had to pay the price to the market for my immaturity. And here I'm going to present to you 7, or some of you who are already into this market, they may consider the top 5. But hey, let's put everything together and the 7 principles or the New Year resolution for you. Take it as an advice. It's an advice from the Sinhanomics for you to make money in the stock market. Well, let's start with that. So number 1, as I have talked about it earlier as well, know yourself. KYS. Know yourself. So you should spend some time in the new financial year to understand who are you. Are you an investor? Are you a trader? Are you a speculator? Whatever you call it. But I categorize them into 2 segments, investment and trader. Trader can be day traders, swing traders. Investors are the investors who actually buy and hold good companies. Think about it, spend some time in the introspection and come to a conclusion that, hey, I am an investor or I'm a trader. But you have to be like that. Don't mix them. Just like you don't mix alcohol, don't mix investment and trading. If you want to do that, you should have 2 different portfolios, one for investment, one for trading. Second, start learning about the companies you like and then invest. This is for the new investors, by the way. So that's why I told you, if you like some company, for example, if you like Apple, you like Apple products, you want to invest in Apple, learn about it. When I say learn about it, understand the product portfolio, understand its financials, the profit and loss statements, the balance sheets, understand some of the valuation matrices like price earning ratio, price to book ratio, EV to EBITDA, cash flow, free cash flow, ROE, return on equity, return on assets, etc., etc., etc. Once you understand all of them, analyze the balance sheet of the company as well as P&L, and then you track the company in a quarterly earnings report, you are pretty much there. Well, these 2 are pretty much for the new investors, I would call that. So the next 5 I'm going to describe now are more for the guys who are already in the market. Well, the third one, or for the experienced one, the first one is stop obsessing over macros. Guys, this year has taught us a lesson. There were a lot of fear mongering going around. US will be in recession, interest rate was rising anyway, that was for real. Japan had a negative growth rate. Germany was pretty much into recession, negative growth rate. So a lot of these things happen. But did it stop the stock market to make new highs? The answer is no. So stop obsessing over macros, guys. Don't worry about the macroeconomics. You saw that the Russia-Ukraine war. You saw now Hamas and Israel war. All these things are happening. So if somebody who will just focus more on those macros will be too scared to invest in the stock market. So stop obsessing over macros. The next one is stop listening to charlatans. Yes, it's true, right? When we have to buy a mobile phone or a watch for that matter, or even for a small thing, we do a lot of research. We go to the web page, which is the right model, what are the features, where I'm getting the best deals. All those research we do before buying any small thing. But when we buy stocks, some good friend has given some advice that hey, you buy Apple, you buy Nvidia, or you buy something else, Palo Alto Networks, and you'll go and buy them. So don't do that. Stop listening to charlatans. And I'll explain what the charlatan means. Actually, they are the self-anointed gurus. Self-anointed specialist. So don't worry about them. If somebody is giving you an advice for free, don't take it. You do your own research. And the most important one is the fifth one now that says stop over trading. What I have found, even in my life earlier, which I have learned a lesson hard way, over trading. If the market is up or down, or if the stock is up, you book your profit. If the market is going down, you'll start. So a lot of the traders, a lot of the investors for that matter, who are not real investors, they get panicky when the market goes down, and they get over enthusiastic when the market is going up. And they do over trading, guys. They trade a lot. And guess what? Who gets the benefit when you trade a lot? The broker, the government, the stock market, who actually charge you the stamp duty, the broking fee, and the other fees as well. For that matter, just imagine there are 5 friends sitting in a room. All of them have, say, Apple shares and Nvidia shares, and they're buying and selling to each other throughout the year. Who got the most benefit? The brokers, the stock market, stock exchanges, the government, because you are paying them so much of brokerage and capital gains tax, etc., etc. So stop over trading. The sixth one is stop chasing the smart money, so-called smart money. I know many of you have been into the momentum investing and momentum trading. When the market is going up, you just buy. When the market stops, when the stock stops dropping, you just sell it. But that doesn't actually help anybody. If you look at the example for that matter, Nvidia. In the last few months, Nvidia has been hovering or moving between the range of 420 to 500. Nobody is smart enough to always buy at the high and sell at the low. No way. You can make money in 1 or 2 trades, but in the other 2-3 trades you may lose it. So that at the end of the day, you'll end up paying more capital gains, you'll end up paying more brokerage, you'll end up paying more stamp duty, government charges. stock exchange fees, etc. So there's no point chasing smart money. If you are convinced that that's the right place to be invested in, do it by all matters. And remember, I'm not talking about the traders, guys. This is for investors. If you're a trader, if you're a day trader and you're making good hell lot of money out of that, please continue that. I'm talking about general people like me and you who are into investing, either new or seasoned investors. For the seasoned investors, you know it all. I don't need to tell you. This video is for those guys who are new to the market, right? Last but not the least, and the most important one, stop your obsession with options and futures. Yes, guys, all these derivatives, as Warren Buffett says, they are the weapon of mass destruction. And actually, history proves it, the data proves it. So stop trading in options or futures. Stop it. Nobody makes money in that. And you see plenty of advertisement coming in the YouTube and all those guys. Trust me, if those guys are so smart, they will not be inviting you for the seminars and then sell you the membership and all those things. They are trying to make more money from the membership and teaching you how to trade options and futures than making money by trading it themselves. If somebody is so smart that they can actually generate 100%, 200, 400% by trading options and futures, they will not have time to come and teach you. And if they are teaching you, they will not be charging you, right? So don't worry about it. Trust me and follow that. Stop your obsession with options and futures. And let me substantiate with some data. I'll start with the US numbers. Guys, in USA, in 2023, this calendar year, 43% of the daily options, yes, you heard that right, 43, almost half, 43% of the daily options volume have ended up with zero value on the expiry day. And even if you look at the previous years, you will be shocked. This number, this 43%, was 36% in 2022. So 36% of the daily option volume ended up with zero value on the date of expiration. In 2021, this number was 21%. 21% of the daily option value or volume ended up with zero. 2020, this was 17%. And in 2019, this was 11%. So you can see the obsession of these traders. I'll repeat that again for your benefit. From 2019, 11%, 2020, 17%, 2021, 21%, 2022, 36%, and 2023, 43% of the daily option volume ended up with zero value on the day of expiry. And guys, if this trend doesn't stop, next year, in 2024, you will see this number going from 43% to something like 55 or 60%. Who is making money? Not the investors or traders like you and me. The stockbroking firms, the guys who are making the market, they are making money. The guys who are writing the call and the put, they are making money. And we are the losers. So why to lose? Stop it. Not only that, SEBI, Securities Exchange Board of India, just released a report that last year, in 2022, 89%, Yes, you heard that right. 89% of the traders who were dealing with options and futures, they have lost money. And remember, all these include the smart traders from the investment banks, Morgan Stanley, right, and Goldman Sachs, and the ones like that. They include them. So including them, 89% have lost money. So why to invest in that? So stop your obsession with options and futures. Let me repeat that for your convenience. In summary, with all the best wishes for happy investing in 2024, please consider these New Year resolutions. You can tailor that according to your own expertise and acumen. If you're new, you can go with all the 7. If you're already an investor, a smart investor, you can pick and choose a few of them. Well, let's start with number 1 was know yourself. Do some introspection and find out whether you're an investor or a trader. Number 2, start learning about the companies you like, then invest in. Find the circle of competence. Number 3, stop obsessing over macros. Don't worry about what the interest rate will do, which countries are going in recession, where there is a war, what's the oil price happening, etc., etc. Don't worry about it. Number 4, stop listening to charlatans, the self-anointed gurus, or the self-declared specialists, so for that matter. Don't listen to people's advice, these charlatans' advice. Learn yourself, understand and analyze your own stocks. Number 5, stop over trading. By over trading, you are actually making the stockbrokers richer. You're making the government richer by your capital gains and the other fees. Number 6, stop chasing the so-called smart money. There's no point chasing this smart money. Once you have understood the company, the segment, those are within your circle of competence, invest in those and stay calm and cool. Give a time horizon of 3 to 5 years. Don't worry about the market fluctuation every day. And last but not the least, number 7, stop options and future obsession. I gave you the numbers. 43% of the daily options volume in USA has ended up with 0 value on the day of expiry. 89% of the investors in options and futures in India have lost money. Well, with that, I wish you all the best. I hope the next year, 2024, is also going to be a fantastic year for equity investors like me and you. And we continue to create our wealth. With that, I wish you all the best. Happy New Year and happy investing. Remember, all these are my advice. Don't forget to consult your financial advisor before making any investment decisions. Sinhanomics is out there to create financial awareness so that you can understand how to analyze a company, analyze it, and make money. If you like this kind of content, don't forget to like, share, and subscribe. I'll come back again with similar interesting topics for you. Till then, it's a goodbye from your finance coach, Pankaj Sinha. Bye-bye.